All right, welcome to the Hudson Board of Trade. It is November 25th. It is Thanksgiving week. It's kind of slow. And we're looking at Facebook today. It's trading 200. And we're looking in February, which is G is the symbol. And when we want to create a positive one slope, OTG off the grid, he gets a trade from a professor here locally in Ohio. And then he's got 4 different choices. And then we kind of modify them a little bit. But anyways, they want to create a positive one slope in this Facebook, and we're trying to do it for cheap. So we figured out how we can do it for 70 cents. And let me explain how. Positive one slope is the long stock position. I'm going to draw a little gap in this line. And then we have a graph of a long call here. We are going to buy this one time. And the stock's trading 200, this is going to be the 205 call. Okay, we're going to buy one of those. And then at 215, the 215 call, we're going to sell 2 of these, okay? And so if I sold one of these, it would just be a flat line. But since I sell 2, we can add these up. I have one positive one slope for my long 205 call. And since I'm selling 2 of these 215 calls, plus 1 minus 2 equals -1. So I have a -1 slope to infinity there, right? Now, if this was a regular call fly, I can look, this is 10 points away. This would be the 225 call, okay? But we're not going to do the 225 call. We are going to do the 230 call to make it cheaper, okay? So I'm going to buy one of these 230 calls, and that way I can get the trade for 70 cents. So at 230, I'm going to buy one call. I have a positive one slope from the 230 call that I bought. I have a -1 slope from 215. So above 230, I get a flat line, okay? So here I've made my irregular fly. Okay, now I'm gonna make money. Right now the stock's at 200. My break even, of course, is 70 cents, right? So 205.70 is when I reach, when I'm in profitability territory. So the stock goes up. If it goes above 205.70, I'm long the stock all the way up to 215, where I reach max profit. Max profit would be $10 less the 70 cents equals $9.30. Not bad on a 70-cent bet. So if the stock sells off between now and February, I lose 70 cents. The most I can make is $9.30 a share. And if it overshoots 215, I'm going to give away some profits, but at 225, I'm going to be flat at 225. Yeah, at 225, let's say I'm going to be flat. I'm going to be down 70 cents. And then I've got $5 more I can lose if I'm really wrong. So the most I can lose on this trade is this $5 plus the 70 cents. So $5.70. But we're targeting 215. And at 230, I get if Facebook stock is above 230, I hit my max loss of $5.70 a share. So I can put on the strategy for 70 cents. With OTG, we're going to trade this for 100 shares, and it's out till February. So for what, about 0.5% of the stock price, we get to own this for max profit of $9.30. I think the trade's pretty cool, especially if you're slightly bullish in Facebook. It's currently trading 200. If you like what we're doing here but you don't understand, please think of becoming a member of the Hudson Board of Trade. I am not licensed, but I was a floor trader for 20 years, and this is for educational purposes only. I've made contracts that are simpler, safer, and smaller for individuals to start learning on. And we've traded over 250,000 shares of these HBOT contracts, so please think of being a member of the Hudson Board of Trade if you want to learn how to trade derivatives. Thank you.